All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen. Hope everybody is doing well today, this fine Wednesday. So we're just going to go ahead and dive in. As always, let's turn off all distractions, grab a pen and paper for notes, and let's make sure that we participate and engage. All right. So we're going to take a look at the fundamentals. And then we'll hop into the charts. Got some movement that happened overnight, which is a beautiful thing. But real quick, before I get started, just drop me one in the chat if you can hear me okay. Perfect. All right, cool deal. Sweet. All right, so let's all right, cool deal. So let's hop over to trading economics. Boom. So top news is stocks fall after Fitch downgrades US. This is interesting. Very interesting. So global stocks around the world retreat on Wednesday after Fitch downgrades U.S. sovereign credit grade, citing concerns about fiscal deterioration over the next 3 years. Major boroughs in Europe were down almost 2%. The Nikkei 225 out of Japan down 2.3%. And in the U.S., stock futures also pointed to big losses at the open. Hold on one second. Can you guys still hear me okay? Okay. Just got a notification that I was logged out, so just want to make sure I'm good. All right. So that's going to be interesting to see how the dollar responds. But then what happens as we move through the week with non-farm payroll coming in on Friday. So and how investors respond to that news. All right. So that is that. All right. Then we had Swiss consumer sentiment improves in Q3, positive for the Swissy. Then oil climbs on sharp drop in U.S. inventories. WTI crude futures dropped more than 1% above 82 per barrel on Wednesday, hitting the highest levels in over 3 months after the industry reports show that U.S. crude inventories declined by 15.4 million barrels last week. Latest figure far exceeds market expectation of 1.3 million barrel draw. And if confirmed by official data due later on Wednesday, could mark the largest drop in U.S. crude inventories in over 4 decades. Oil prices have also been rallying since late June as Saudi Arabia's voluntary output cuts tighten global supply. The de facto OPEC leader is also expected to announce an extension of its 1 million barrels per day production cut through September at the group's meeting next on Friday. Meanwhile, Biden administration pulled an offer to buy 6 million barrels of oil from U.S. strategic petroleum reserves to counter rising energy prices. All right, so that's what's happening on the oil side. That makes things very, very, very interesting. All right, very interesting from oil. Definitely could see that continuing, rising to the upside. We talked about it a bit yesterday during the pre-New York session and the Asian session. So that'll be interesting to follow as well. Over to the calendar. Let me refresh this here. Yesterday, New Zealand dollar employment change 1% to the upside, good for the currency. Unemployment rate 3.6, just above the expectation. Then today we have ADP non-farm employment change precursor to that event. So we will see how those numbers come out and see how different they are from what happens on Friday. But overnight, we also had manufacturing PMI come out below expectation for the Swissy, right? We were looking at some of those Swissy pairs and seeing how they could respond. That Euro Swissy is starting to turn and push to the upside. So we'll take a look at that as well. We've got trade balance coming in tonight at 9:30 for the Aussie. And services PMI for China coming out later tonight as well. So that's where we are on the calendar. And that's what we got there. Benny, good morning, bro.
Ryan, good morning, sir. Good morning, everybody. How are you this morning, Ryan?
Doing well, man. How about yourself?
You're doing great. Glad to be here as always.
Yes, sir. Anything fundamentally that you saw overnight, early this morning?
Oh, I just want to see what's gonna happen with the U.S. stock market this morning,
Yeah.
since the other markets are dropping because of that downgrade. So there's been a negative reaction to that. So I wonder if it's gonna push the stuff like the S&P into a correction.
Mm-hmm. Yeah. And we talked about that some yesterday. It will definitely be interesting to see.
Yeah,
For sure.
it's front page. You know what I mean?
Yeah.
So I'm trading economics. So you see that, stuff is down 2%. Nikkei 2.3 is down 2.3% as a result of it. So that's just a reaction in other markets. So we've yet to see what's going to happen with the U.S. market when it opens up. So I'm interested to see what happens.
Same. We shall
Yeah.
see, man. We shall see. All right, cool deal. So let's take a look at the dollar, see what is happening there, and then come back to this this Euro Swissy. DXY. Dollar still pushing along, right? Coming into I ran fibs just off this last high here, right? We know that crown is still intact, but off this last high, fibs coming into a 786 retracement level, and looking to see what happens here, right? What happens throughout the day today, into tomorrow, see how investors respond to that downgrade news, right? And then we'll go from there, right? We got a previous zone of consolidation that we're pushing into right now. We'll see if we get back to this this daily resistance level at 12,934. All right, down to the 4 on this one, and this is what that looks like there, right? Got the break and retest and still pushing to the upside. Okay, so we shall see where we end up at the end of the day. Yep, that A finally got taken out here on the 4. So we'll flip this and run it from the bottom. Boom. So that's what that fib on the 4-hour looks like there. Pushing into the D extension here, right? A little bit overextended on this move to the upside. Likely get to that D extension, and then we'll see how much further to the upside we push. Okay. Okay, so that's the DXY. want to hop over to, I want to look at the euro dollar first. Carolyn, I want you to talk to me. Carolyn, put some great posts in the Discord this morning regarding the DXY and how we trying to find some support here. And potentially we'll see how things move through the day today, but we'll see if we get a turn and a pushback to the upside. Broke back up below this level. We can take that out now. Boom. So that's where we sit there on the euro dollar. Carolyn, in the Discord, waiting on bullish candle on the daily to buy. So you stated that, we'll go down to the 4 and take a look at this real quick. You stated that you were afraid of the drawdown off of the original push on the lower time frames. What exactly are you afraid of? Losing money. Okay. So when we're in these situations, I like to have these conversations because I want to talk through the thought process with you, right? So first question is the trade in your sweet spot on whatever time frame you trade off of? And the reason I ask is we want to, in our trading plan, as we're building this out, see here on the 4 hour, we're pushing to that 382, and that's that support level off the daily time frame there. As we build our trading plan out, we want to build in questions that remove the emotion from the situation, right? Remove the emotion from the situation, right? So strictly yes or no questions, right? And this helps from the psychological perspective and being able to move through the emotion, right? Because it's going to be there regardless, right? But we want to move through it just by asking yes or no questions. So first question, is the trade in your sweet spot? You said yes, 618 retracement. Beautiful. Next thing is, what confirmations do you look for when you're looking to enter a trade? Right, so we see here price push down to that 618 retracement. That's that daily support level, and we're pressing sideways here. Swing low and break your retest on what time frame? On the 1 hour. All right, so looking at a break and a retest of the trend line. Okay. We've got trend lines running down. We'll run an inner trend line off the high. This is our low. We'll have some more conversation about this, but I just want to illustrate something for you. Actually, without cutting off any wicks or bodies, that would be the move there. And you see we press sideways through the trend line, right? So then we would go there. Boom. Right? So there's our move, right? Without cutting off any wicks or bodies, getting to the lowest point, and that's where we are. Okay? So we zoom in here, and you got to break and you got to pull back. So what drawdown are you concerned about? Entering off of the break of the trend line here? Okay. So your rules say break and retest, right? Or break and pullback. Is the retest same as a pullback for you? Okay. So if you got a break, have it in the rest of this did not exist. If you got a break of the trend line there, are your rules met? Okay. So if your rules aren't met, would you have entered the trade? So would you be in drawdown? Bingo, right? She said no to those three questions. So you wouldn't be in drawdown. So therefore, it's nothing to be afraid of. Right? Nothing to be afraid of. You're waiting on the pullback. So now that you got the break and you got your pullback, is this trade in a position for you to enter? Are your rules met today? Now? No. Why aren't your rules met here? What else are you looking for? What other confirmations do you have in your trading plan? Why do you need another swing low to form? Confirm support. Okay. So at that point, would you adjust your trend line and move it further to the outermost point? Or two questions here. No? Okay, great. Would you then wait for, well, if, ask this question, if you get a bullish candle to confirm that swing low that looks like that, would you enter the trade? Why not? If that candle confirmed your swing low, why would you not enter the trade in that scenario? Yes, you would. Okay. So yes would be the answer there, right? Because it confirmed just you got your second swing low and it's a long bullish candle. The reason I'm asking that is you still could potentially get some drawdown here, right? And I want to make sure that you're thinking through that and you're ensuring that when you feel the fear, you go back to your trading plan and you look at your yes and no questions, right? Not being afraid of the drawdown because drawdown is going to happen, right? And not being afraid of losing a trade because losing a trade is going to happen, right? And so when we feel that fear of loss, right, we want to revert back to our rules and we retrain our brain and change the words that we're telling ourselves, right? Change the words that we're telling ourselves. Yes, I feel this emotion. What do my rules say? Are my rules met? Yes or no? Don't continue to add additional rules on top of that because we're afraid, but surely look at the rules that we have, the rules that we've talked about. Are they met? Yes or no? And if the answer is yes, then we pull the trigger. But I'll have more confidence knowing that I had a strong bullish break on the 1 hour and a couple of swing lows that form. Why would you need a couple of swing lows to form if you have a bullish break of the trend line and a pullback? Because what I caution us doing, right, is looking for the perfect entry and less drawdown because it's going to happen. Because what happens if we get this bullish push here and then, whoops, and then the market does this? Are you going to close your trade? Right? But you're in drawdown anyway, right? And then if the market continues to push down like this, right, now that fear continues to pick up. And then most people in this situation, they're going to close their trade because they're in drawdown, right? And then the market's going to do this. Oops, probably not that low, but right. So as you feel that fear, right? Correct. But you said more confidence because you have more swing lows, right? You can have swing lows all day long going across and moving to the upside. But if we delay in pulling the trigger, now price is going to move out of our sweet spot, and that drawdown that we could potentially see and that risk to reward that we talk about with price being in your 618 retracement zone, right, is going to be more because now you're entering a trade here instead of here, right? So I'm walking us through this because I want to ensure that as we're thinking through our process, we have rules, but we don't continue to add additional things that don't confirm anything, right? Because if you were to say, okay, I want to break a pullback and then a break of the cloud. Okay, you have three forms of confirmation because we're unsure of where the market is. So we add additional confirmation on top of that, right? But if we have a bias and we're looking at price moving in a particular direction, right? And our rules are met, we have to get to the point where we're pulling the trigger, right? If our rules are met, we have to pull the trigger and not add additional points because we're afraid, right? Because we're afraid of drawdown, right? We got to remind ourselves, drawdown is going to happen, right? There's no way to avoid it. And we've been trained in this space a lot of times that, oh, you have to have this perfect entry, right? It doesn't exist. The perfect entry is the entry on the trade that goes in your direction at some point, right? The perfect entry isn't having minimal drawdown, right? And if we try to play that game of timing the market, sniper entry, exactly, right? If we try to play that game of timing the market, we're going to get to a point where we're losing more than we win, right? Because the market, and we talked about this on Monday, but the market doesn't move on our time. The market moves on its time, right? So we have to retrain ourselves to follow the rules that we have in place and pull the trigger when those rules are met, not delay and look for more and more, because that list can then be endless and we never enter a trade, right? So we want to pull the trigger when our rules are met, when price comes into our sweet spot. And we want to simplify things in our process so that we don't overthink every trade. And now we're trying to time the market because we don't want to have any drawdown, right? Does this make sense? And I hope this is helping, because this isn't just about Carolyn, because I was in this space before too. But the conversation this morning kind of spurred that thought, and I wanted to have it with everybody because we don't control this thing called financial markets, right? So therefore, if we don't control it, right, then we don't know when the market's actually going to change direction. So all we can then do is control what we can control, and what we can control is the rules that we have and forcing ourselves to follow those rules, right? But in those rules, perfect entry can't be a part of those rules because the perfect entry doesn't exist. And if we go back to the definition of perfect, right? By definition, nothing is perfect. Okay. So therefore, we won't have any perfect entries, right? will have entries that meet our rules, and we pull the trigger. We feel the fear, and we retrain our brain about the fear by pulling the trigger and doing it anyway. Right? And we have to tell ourselves, drawdown is going to happen. Accept it from the beginning. But you then have to go back to your rules and ask yourself, did I do the math? If I know how much I have at risk, if I know how much I can lose, then I'm okay with that. Because I know that I'm not over leveraged, because that's where the fear really comes from. And that's how a lot of people are taught, right? Is when they're taught this game of perfect entries, they need a perfect entry because they're over leveraged and they can't take any drawdown, because if they do go on a drawdown, then they're going to blow their account. Right? But if we know we did the math and we know that we're not over leveraged, then we can take drawdown. We know that this stop loss is 143 pips. And I'm okay with that because I'm only risking 1% of my account. Right? I'm only risking 1% of my account. And if I'm only risking 1% of my account, then I have to lose 100 trades in a row in order for my account to be blown. Right? Does that make sense? And if we have to lose 100 trades in order for our account to be blown, then this one trade going against us, it's okay. It's okay. And then we have to go back and tell ourselves, I'm going to lose trades. I'm going to lose trades. That's going to happen in this game. But as long as I do the math, as long as I know what I'm risking, and as long as I know that that's only 0.5%, 1/4%, 1% of my account, then if the trade goes against me, that's okay. Because I know I have 99 other trades that I could lose before my account is blown. And if I follow my rules, and my rules have an edge, then I won't lose 99 trades in a row. Right? So, Reese, I would, on the prop firm, that's a great question. On the prop firm side of it, I would calculate the risk based on the actual value of the account, right? So if the overall drawdown is $4,000, right? That's for that total value of the account, right? And so you want to do the math on what the actual percentage that is. If it's 5%, right? That max loss is 5%. Then you want to do the math and break that down. Benny, correct me if I'm wrong on that statement. But so if it's $4,000 and the max drawdown is 5%, you're looking at $200
Correct.
as your actual value of the account. And you want to do the math based on the $200, which is the actual value, not the face value of the account. That's where a lot of people get blown up. Does that make sense, Reese? Okay. So go ahead, Benny.
Yeah. So for example, if you got a $5,000 account, so if they say, we're going to start you at $5,000 and your max overall drawdown for that account. So if you hit that drawdown, you lose the account. It's 6%, right? That's 300. That's 300 bucks, right? 300 bucks. So you're actually starting out small. The 5,000, it really, in a sense, kind of represents the amount of leverage you have overall. And this is where people get burnt on those prop firms. So I'm trading. If I have a $5,000 account, they say your max drawdown is 6%. That's $300. So your max drawdown, you cannot lose $300 or whatever it is. Okay, I'm gonna work my risk off of that drawdown. That's when we'll five, or say if it's 10%, my drawdown is 10%. Well, that's 500 bucks, right? So you're gonna work all your calculations off of 500 bucks. So yes, you're gonna be trading at micros, right? Because they're gonna tell you to gain, maybe 10%. You see what I mean? So you're gonna be trading small. So I wouldn't focus on, when you're looking at those levels, right? To make it super simple, I wouldn't focus on the size of the account. I would focus on what the overall drawdown limit is in that account, because that's really what you're actually trading, right? So think about it. If they said, hey, we want you to make 10%, if your drawdown is 10%, sorry guys, hold on 1 second. I'm out.
Right. So,
All right. Yeah. So if your drawdown is 10% and say $500, then think about it. If I took 1%, right? If I traded 1%, my max drawdown, if I actually traded the 1% of the 5,000, I wouldn't be able to stay in the game long at all. Everybody follow us on that? Yes, no? I got one yes.
yep, we got them coming through. Yep. Joy,
Okay.
Carolyn, JC,
Okay.
Christina.
Right. So you're gonna trade small. This is like what you have to think about overall, right? If I'm gonna trade for a prop firm, like they're trying to evaluate if you have an edge in the market. Can you really, if you take a prop firm challenge or whatnot, or a test, if you take that challenge and you hit that goal and say 10 trades, does that really give you enough data to really truly figure out if you have an edge in the market? Yes or no? No, right? So they want you to trade small, show an understanding that you understand proper risk management and how to manage capital, and they want to see that over a good series of trades so the data could be collected, and it helps you develop your trade discipline. So when you do get to those higher levels, 1 million, 4 million, or whatever it is, that you've got everything under control and that you truly have an edge in the market so that you don't blow the account. But what Ryan is saying, so many people blow that account is because they focus on that big overall account size value that you have, but what you really should be focused on is that max daily drawdown. I mean, the max overall drawdown, because that's what's going to get you buried. If you can have an account that's worth $100,000, but if your max drawdown on that is $10,000, that's what you're trading, right? So what's 10%? So what's 10%, Carolyn, of $50,000, right? If you got a $50,000 account, the max drawdown is 10%, right? That's 5K. So that's what you're trading. So when you work out your risk, that 1%, right? You're gonna do that on 5K, not 50K. If you base your 1% on the 50K, you're not gonna have too many opportunities to trade at all. Okay. All right, Ryan. Thanks.
Yep. Hey, no doubt. Appreciate that.
Yeah.
All right. That's making sense, Reese? Yep. Cool. Hope that helps some people. And we have plans on digging into that conversation more. But that's how the math works. That's how the math works. Right. So cool. Questions on any of that? The mindset piece, pulling the trigger, rules, prop firm math.
Now the learning is when to get out or when to add on.
Yep. Yeah. Right. So when to get out is based on where you're placing your stop loss, right? And your take profit is where we anticipate price going. The adding to the trade, now this is where it gets interesting and fun, right? So price moves in your favor, you're risking that 1%, right? As price moves in your favor, right? This is our bullish push, right? We get a pullback, right? And then price turns over, right? So we had a new fib come in, boom, right? Didn't make it to our sweet spot. Well, let's just say, right? Let's change this. Let's just say price did pull back into our sweet spot. Boom, right? And then we have price turn over, right? Here's a scenario where, right, you're only risking 1%. So price pulled back into your sweet spot. You got a trend line break. I know my candles don't do us any justice here, but imagine my artwork is like Picasso, right? You get your trend line break, boom, you re-enter your trade here. Bang, right? That's your second entry, right? Because your first entry is in profit, right? First entry is in profit. Okay, so that part is no longer at risk. You move that stop loss to break even. Now you're still at your 1%. Does that make sense? All right, so that's how you manage that, so that your stop loss comes up, boom, we're break even. Trade moves in my favor, came into the sweet spot, add the position there, price continues to ride up. Now, as price moves to the upside, maybe takes out that previous high, you move that second stop loss to break even. So now you're basically in profit, and you can't lose on either one of those positions, right? And you're playing the waves as they continue to move up. All right. Other questions? No? Welcome. All right, beautiful. Okay, so that's the euro dollar, right? It's lingering around here. We got a trend line break, we got a pullback. So the other thing to think about here too, right, is yes, we're in consolidation still, right? But we are in a sweet spot. We did get a nice bullish push and a break, and we got a pullback. So now let's see if price continues to move to the upside. All right. That's the euro dollar. I want to look at this euro Swissy. Euro Swissy. So overall, yes, being recorded. It's on YouTube. We'll save these recordings so that we'll be good. Overall, this euro Swissy, right, is down, right? This is on the weekly time frame, pushing down, fresh AB boundary. We got a 382 on the weekly. started to press down, right? We got a low there at 94,031. Tried to push up, we came back. So now question is, will we turn back over and continue making our way to the upside here, right? Will that occur? Okay, so come down to the daily, right? Daily time frame, here's that look. Okay, we got a 382 push here, still not able to fully break out to the downside, right? We didn't get back to the low at 94,031. We had a level of daily support here that we broke below. Prices turned back over and broke back above that level, right? This was support here, broke it, and didn't hold as resistance. So we're breaking back above. So we want to see today if we close above that level, right? That'll give a little bit of confirmation that we'll at least make it back to this 96,836 weekly support, right? But we could also be moving further to the upside if we continue to stay bullish on the euro. Okay. So that's the daily. Coming down to the 4. 80-20. So that break below and that pushback above now makes sense. Shallow retracement, 118, 127 zone. We got to swing. We got to pull back. Price is pushing to the upside. Right. So 382 on this 4 hours in line with that weekly support level. Right. So let's see if we get back there. Okay. So 80-20 on the 4, coming down to the 1. Larger fib, but 80-20 scenario also here on the 1 hour. Shallow retracement, 118, 127 zone. We got a cloud break. We got to pull back to retest the cloud, and we're pushing long. Right? 382 is also in line with that weekly level. So looking long here in the short term, that data that came out early this morning on the Swiss kind of helped a little bit, gave us this nice little bump to the upside, right? Now we're stalling, pulling back, retesting this daily level that we just broke back above, right? Now this could hold that support. If it does, right, it's 1 hour candle, that'll give us a swing low, and then we can look for that to continue riding to the upside. Okay. So that's the Euro Swissy. Questions here? Who did we miss? No, that's tomorrow. Tomorrow. Okay, my bad. Aussie Swiss, let's look at it. Daily time frame. Boom. Right. Press down. This was a level of daily support we hovered at. Broke below. We pushed into the 118, 127 zone. We have an all-time low here at 53,414. We'll see what happens, but we did push just barely into that 118, 127 zone here on the daily time frame. Okay. And we got a little bit of indecision. Okay. Coming down to the 4 hour, we hit the D extension. Okay. We talked about this, right? Looking for price to come down and hit that level and to push into this 118, 127 zone. So now we want to watch to see, do we get a swing low here? And do we get another push down maybe, right? This is a pretty large zone there, but D extension hit on the 4, okay? Come down to our 1. Boom. 80-20 here on the 1 hour as well. So the question is, do we turn over here, right? So this is where we add the confirmation. And this one I'm a little hesitant on because the Aussie isn't the strongest, right? because they held rates, and they took more of a dovish tone early in the week. So price pushed into the sweet spot. So we're looking for confirmation. Let's see. Based on the trend line, we're using a trend line break. We did get that. We got to push there, right? If we use the cloud for the confirmation, still waiting on that, right? So this is what I'm waiting on here, is the cloud to turn bullish and us to get a break of the cloud, right? So if you're using the trend line, you got a trend line break here, right? If that's the confirmation that you're using, which is beautiful, right? Move there. I'm waiting on the cloud. I'm waiting on the bullish twist, price to break the cloud, and then I'll enter this trade if it's going to turn over here, right? Because what we could potentially see here, right, is this move up and then come back down and move further in the zone, right? So the cloud is my additional piece of confirmation that I'm waiting on, right? Because of those two things. Yeah, the data on the Swissy was soft, but we also have a soft Aussie as well, right? So looking to see which one makes out here. So I'm waiting to see that cloud break. David, regarding the old YouTube channel, haven't heard back from YouTube. So we had to start a new YouTube channel and we're building it from scratch. So we have the videos that we have going forward. Soft means dovish or below, right? The data on the Swissy came in below the expectation. Where'd that go? Here, right? Came in below the expectation. So below, soft, dovish, all of those are similar, same terms. Welcome. Carolyn, I got you on that. I got you on that. I got you taken care of. I'll let you know when that's available. The new channel is the Forex Trade Room. If you search the Forex Trade Room, it'll come up. I posted the videos that we've been recording that are in the back office are linked to that new channel. Also posted it in the Discord as well. Here, I'll do one better. Give me 1 second. I'll drop it into the chat for you guys now so that you have it. We had to make some changes to the handle, but there you go. All right. Cool deal. Any other questions on the Aussie Swiss? Oh, all right, cool. We were talking about the pound cat last night. I appreciate that, Carolyn. We appreciate that. Talking about the pound cat last night and how it's just been bouncing and bouncing and bouncing, right? It's trying to make its way to the upside now, right? That level of support is holding, right? Is holding, and price is trying to turn back over. We'll see if we can break back above this 171 level at some point. But coming down to the 4 hour, right? Benny was talking about this level here right? 170, seeing if we can break above that level, and we finally were able to do it on this push here, right? 1 o'clock. So we broke above that level. We're retesting now, see if we can continue pushing to the upside. Overall, this is the larger fib. This is larger fib price pushing to that 618 retracement zone, and we just been pressing sideways. Okay, just been pressing sideways. In and out of drawdown a little bit. So let's see, we broke that level. Now let's see if we can start making these stair steps. And so we broke that level. See if we can break this next level here. All right, and start making these higher lows and higher highs, right? So these are 3 levels that we'll need to break above to then really be able to get some motion and movement back to the upside. All right. So it's trying to get back to where it was. We'll see how things continue to move. All right. So coming down to the 1, there's the look there. Right. We had the 80-20 on the move here. We got to a 618 retracement on the 1 hour. Right. Came back down, not able to break out to the downside, held at the level, and now we're trying to push to the upside again. Okay, so we'll see if we're able to break those levels and continue moving. That's the pound CAD. Look at this Euro NZD. This one is interesting to me. Want to see if we're able to break this level here at 180, right? 382 retracement on the daily, pushing to the upside. Each time we get to this level, right? Weekly level push down, daily level push down, weekly level push down, daily level we're pulling back again, right? So I want to see if we're able to break this level and continue marching to the upside there. Coming down to the 4, right? Nice push into the 618 retracement. Matching D extension is here, but again, right? We haven't been able to sustain above these levels. So maybe this time is it. We'll see. We had a similar action here. We pulled all the way back. So this was a level of previous resistance here. We broke it. Now let's see if this can hold as support and continue moving us to the upside there. Okay. Coming down to the 1. There was the move. Okay. I know this is messy, right? Fibs going in both directions in that consolidation. Got to the 382, but we pushed down into the 118 and 127 zone and we turned over. All right, so we flipped the fib, run it off the low. Another 80-20 scenario, shallow retracement 118, 127. We're pressing to the downside. So the question is, do we continue moving down before we move back up? Right. So we're still stuck in this range. Not pretty when you get down to the lower time frames. Honestly, not too pretty on the top side either. So just stuck sideways, just watching this one. Really want to see if we can break these 2 levels here and continue this move long. So not trading it, but I want to take a look at it to see, because I hadn't looked at it this morning, see what's happening here. So just watching to see what happens. All right, we could potentially come down a little bit further before we get a push back to the upside. We'll see. Okay. Questions on this Euro NZD? Not many questions to ask on that one, Ryan. Euro yen. It's trying to get there, man. So did this fib pop in yet? Nope. So fib on the weekly hasn't popped in yet, but no, we still don't have a swing high. Let's take that out. This is our highest point here. We need this week's candle to close to give us a swing high there. yeah, the swing trades is where you're really able to compound some things. That's our belief. Yes. So coming down to the daily, don't have that swing high on the weekly yet. Daily, we're just bouncing around, right? Came back, retested this weekly, was resistance, served as support, pushed back to the upside. We're hovering in this range, right, that we've been watching, but we haven't been able to get to this monthly and daily de-extension yet, right? And this is what I really want us to get to so that we can see if we turn back over and press down to the downside. We'll see here. We'll see what happens. Take that out. So coming down to the 4, this is the, get my fib to pop in. Maybe. Nope. Let's see where it is. There we go. Still hovering around in this 118, 127 zone on the 4, right? Still hanging around here. That trend line would be adjusted to there because we're pressing sideways, right? So trend line is there and we're moving sideways, right? I want to see another push to the upside, but on the 1 hour, do we get a pullback first? That's the question, right? And this is the scenario that I'm playing here. This 80-20 retracement, and then looking forward to push into that monthly and daily de-extension, right? Took the position originally here, and then, right, we're just bouncing and ranging. So, yeah, that's where we are. We haven't broken the cloud yet, don't have a bullish twist ahead, so we could just turn over and press back to the upside. I'm okay with that, right? But that's what I was looking for here, looking for this retracement to come, boom, and then give us a move back to the upside and get to that deep. Okay, so we'll see if that happens. We'll see if that happens. Right. Like so. Okay, so we'll watch that and see, right? If you're running your trend lines, you got a trend line break there, right? So we'll see what happens there. Questions on the Euro JPY? Okay. Cool deal. Vinny, you got anything that you got your eyes on this morning, bro?
No, sir, not at this time. So I'm interested to see what happens tomorrow with the Bank of England.
Yeah. I got my eyes there too. I've got
You
my
know,
eyes there too.
yeah. And I mean, and it gets like this. Sometimes we're just riding those trades out. Like dollar
Mhm.
in, cat in. When you get good entries on those trades, you kind of just is sitting in them. That's the beauty of swing trading. So maybe
Yep.
not a new initial trade, but maybe looking for opportunities to add the trades that we're already in. It takes patience and it
It
takes
does.
time, which
It
is
does.
and it's a lot of it's a lot of beauty that comes with swing trading. It's definitely worth learning. That's exactly why you see all these prop firms all of a sudden they took the time frames off, didn't they? Right?
They they removed them. They
Because it
removed them.
doesn't work. It doesn't work. That's why. That's why. The 10% in a month, the 20 trade days doesn't work. And at some point, they need traders to be successful.
Yep.
So it's falling right in the lap for a swing trader now with
It
all these
is.
prop firms. So it's a beautiful
It is.
thing, man. But other than that, man, great session. I don't have anything else right now that I'm looking at. So
Cool deal. Appreciate it. Questions,
mhm.
team. You guys got any questions about anything that we talked about this morning? All right. Cool deal. Look, good people. Patience pays. Develop your rules. follow the rules, pull the trigger, do the math. Or do the math, pull the trigger, right? You guys got this, man. You guys got this. One step at a time, 1% at a time. That's what it's about. That's what it's about. So continue asking the questions, continue giving your thoughts. We can continue having these conversations because this is where we really grow, right? This is where we really grow. We can look at the charts all day long, but if we don't understand how to manage ourselves and our minds to be able to implement the things that we learn on the charts, then it doesn't matter, right? It's part of the experience and part of that growth. So I appreciate you guys. I appreciate the conversation this morning. Carolyn, I appreciate you allowing me to walk through that thought process with you. That stuff is valuable. So have a phenomenal day. We'll be back at it tonight, 9 p.m. Eastern Standard Time for the Asian session with my awesome partner, Mr. Benny Allen. You guys have an awesome, awesome, awesome day. We'll talk to you later. Peace.